Hello.
Adam, how are you? Can you hear me, buddy?
I can hear you. Can you hear me?
I can. All right. So thanks for coming in at the beginning of the month to talk about seasonals, Adam. You're one of my favorite guests for many years now. And the screen share is a little green box.
Yeah. Yeah. Working on it here. Got it.
Okay.
Get some charts up there. I don't have
Okay.
charts to show, but
There we are.
how are you doing? How's
I'm,
everyone? I just heard all they're talking about the Ducker I was talking about on Friday. These are pretty.
yeah, what, you have a new app that you guys are offering
No,
for?
it's not us. It's a totally free thing. Nothing we're selling. It's kind of something I discovered a little bit, and that's the problem, right? When you're doing anything. I mean, I always have a squawk going, and I actually have two squawks going. And the problem is, if you're listening to, say you wanted to listen to music, or if you're listening to watching a YouTube video or whatever it is you're doing, and you have some audio in the background, and the squawk comes on, it was always a competition, right? You couldn't really make out what they were saying. And this, it's called a ducker, and it has, I guess, maybe public address announcement kind of utilities. Normally you could you set it, it's a video and explains how to set it up on your computer, just this little app. But if you're running a squawk, and it'll mute something the instant the squawk comes on, and then it'll kind of go back to that, so it gives you this little audio cue and you don't miss anything. So it's a handy little utility that I made a video on.
You're always on the lookout to share what you've discovered to give you an edge in the markets, Adam. I respect that about you. So, and everything you guys do at Forex Live, I mean, you really serve the trading community, and I really respect people that are out there every week trying to help and build up traders in a pretty difficult endeavor. So, talking about difficult endeavors at the beginning of the month, you kind of have a look ahead based upon your research on seasonals. So why don't you tell us about a few things that the seasonals are pointing to this September?
Well, I mean, August was incredible for the seasonals. We were talking about it then. And the great, the differences in months is a lot of times you take a month like August, and generally, wasn't exactly true this year, but in generally it's kind of a month that's on a bit of autopilot because there's less news. Central bankers are on vacation, politicians are on vacation in general, and you kind of get this seasonal drift that works really well. And at the start of the month, you talked about it was a really strong month for gold, and weak month.
Yeah, I remember you liking the gold last time we talked, Adam. That was before the acceleration to the upside.
Yeah, well, I mean, Trump really helped out with that trade there for a bit, but it worked out really well. We had a little report card on the August seasonals, and they were really hit it out of the park. I mean, it was Kiwi weakness was another one. August was the top month. And then you get into September, there's a little bit of the flip side because you have always these fundamental setups coming into the month. I mean, there's a million things really coming in the next month, and that is typical of every September. So you get less of the seasonal skew, but there are a few things that come time and time again on the seasonals. And I'll pop up I show some of the things I look at, and one of them is kind of how you can set up into the end of the year. There's a few sort of end of the year trends, and one of them is oil weakness. And that is kind of just a snap.
It's really starting off that way today, bro.
Well, it is, and I kind of have a theory on what's happening with oil because it's moving forward. And you look kind of over time, the general theme, there's always been end of year weakness, but it's been pulled forward. And I believe that for many years it was always boosted around this time of year by hurricanes, right? Anytime you had a storm, years ago especially, you'd get this spike up in oil. But now it's changed because of U.S. production in oil becoming so high that now you can even have a situation where if a hurricane hits the right way, you lock in exports stuck in the U.S., you can drive down oil. More or less, it's not as positive as it used to be. I think you get this anytime there's a spike in September in oil on a storm or a hurricane, you get this really aggressive selling. And I think it's creeped a little bit earlier. And I think if you see anything in September, it's an opportunity to sell it. So, not necessarily a September trade in and of itself, like a buy and forget about it trade or sell and forget about it. But there's some weakness there that really creeps in, and you'll see it really kick in later in the year. Another one is it's a weak month for stock. Oh, go ahead.
Oh, anyway, when you look at crude and you look at the daily, it's a big descending triangle. We break under $50. It measures under 40. You think
It
that's
is, yeah.
achievable?
You know what? If you look at the way oil companies are trading, it's insane. I mean, it almost looks like it has to go to 40 because they're trading as if they're going to bankruptcy. And, you have like good companies that are making a lot of money at even 53 here that are, like dividend yield of 15%, that kind of thing. It's just, to me, looks like the oil market is ready to roll over. I don't really believe it because I think it's, fundamentally, I look at it, all the cars today that are burning oil are still going to be on the road in 15 years. A lot of them are. But yeah, it's definitely the descending triangle. The last few times we tried to get higher, have been these series of higher lows or lower highs, pardon me. We don't really have the lower lows yet, but it's kind of consolidating around this lower part of the chart. And, it doesn't look great. Seasonally, it's not great. And, fundamentally, we can see a lot of things start to roll over here in the next little bit. So
okay, so a negative trend for oil. What else?
Well, you compare that as well with CAD, and it is a negative month for CAD. It's not, the weakest month for the Canadian dollar, but it's, among, I think, third or fourth weakest number. Yeah. So dollar CAD, the September, really through September, October, November period is pretty strong. And you can you see it really kicking off today, as far as I'm concerned. You break above this 133.50, 40 level, and you couldn't get above there all throughout August. The Canadian data has been sparkling forever now, but eventually it's not. You can't beat month after month, day after day on economic data, and eventually it levels out. If you back it up and look at year to date, CAD is flattish. Kiwi and Aussie are down 15%.
Yeah. Is the BOC going to relent to the global trend and begin to ease?
I think they will. I believe, I even think there's a chance. I mean, I was just looking at the numbers. It's 6% chance of a cut this week. We meet on Wednesday. Tomorrow. Okay. I keep thinking today's Monday, but of course, the long weekend. So they meet tomorrow. The market isn't really looking at a cut, but you only get it. One of the most powerful things you can do as a central bank is surprise. And we only really have one crack at surprise here because they'll have to foreshadow something in October. I think at the very least they imply a cut in October, which is no real different from cutting. And that's what you're seeing in the Canadian dollar, getting ahead of it. And if it's a strong signal, you're probably up to 134.50 around the highs of the year there. Maybe not tomorrow, but over the next few days. So yeah, I think it fits in nicely with some seasonal weakness in the Canadian dollar, seasonal weakness in oil and stocks. It's a poor month for stocks. Over the longer term, over the last few years, it hasn't been that bad. But we have some weakness in the stocks. So it kind of lines up, I think, for a dollar CAD trade on the FX side.
I know it's a fairly new instrument, but I mean, everything's about the trade war, right, Adam? Do you have anything in USD won? We're pressing new highs. It broke out on the announcement of new tariffs a few weeks ago, came back and checked it. Any view on the won? I think that until the won starts to come back down, there's, I look at it as more being a risk-off environment. Do you see it that way?
Here's how I don't have the chart. I have the chart on Bloomberg, so I don't have it on this back here. But there's not so much to talk about the chart. It's just blue sky above where it's broken out already.
Okay.
But here's how I see it all coming to pass: is that the bond market's signaling a deep global slowdown, right?
Yeah.
And the way it gets to the U.S. or to North America is via the currency market. I think you're going to get a much stronger U.S. dollar in the months ahead, and it's we have Trump complaining about it already, but the market's like this evil genie that squeezes you, right? And even not even applies to the president of the United States. I think we're going to see the euro really roll over, the yuan roll over, 5-6%, maybe 10% in the euro, and then you just have to have some importing of weakness in the United States, right? You had to buy corporate profits, and you see some layoffs. And I don't think the U.S. is hurt in the same way, but I think the currency market is really about to buy dollars. And you see it even today. You know, it came off a little bit, but we have the euro finished last month on the lows, right? Finished last
Yeah.
week on the lows.
So 10%, you're talking under parity for a
Yeah,
longer term objective
I
here.
think that's, you know, the first target's going to be parity. There's 104 right at the bottom of the euro there. And there's nothing to like here. And I even wonder if Draghi doesn't say, you know what, I wonder what the FX market reaction to that would be if he says, you know what, we don't really have much we can do here. It's time for governments to step up. Because at some point you're going to get there, right?
So you need the monetary route has been losing potency for a long time. And, you know, you look around the world, including the U.S., for people to get something done fiscally with all this, you know, diametrically opposed views and people just trying to stop each other seems to be difficult. But I also want to get back to the recession. Have you ever heard a recession being promoted and talked about, an upcoming recession before a recession so loudly in financial media? Oh, because of the inverted yield curve?
Yield curve. It kind of speaks to the financialization of the economy, right? And this 24-hour news and bombarded about everything and a vile political backdrop and everything. That, yeah, I remember when the yield curve inverted in, you know, 2007 or 6, whatever it was. And it was people, we talked about it, but you didn't see it on the front page of the newspapers. You didn't see it on CNN. I mean,
yeah.
Now, it's predicted all these yield. Everybody wants to talk about the yield curve, and yeah, this recession's coming. It is. And it becomes that self-fulfilling prophecy problem, right? And people cheering it on, which speaks to, I don't know. You know, you could probably get deeper into what it means in the world, but you've never seen anything like it. Who would cheer on a recession? It's crazy. It's so much.
How about this, Adam? That, you know, the reason the trade war and the softening in the manufacturing sector is not hurting the U.S. as much is because it's 11% of the economy compared to what, 25 or so in Germany and China, the rest of the world more dependent on exports than us, and that a recession won't happen in the U.S. until you start getting weaker numbers on the consumer. And I was reading that, you know, with what's happened to real estate prices here in the U.S., what a recovery. I mean, you know, a lot of places are much higher than they were before the housing crisis, and rates being this low, that the consumer has about 6 trillion in real estate wealth to tap into like an ATM on their properties. Wouldn't that help stave off?
You know, that's why it's so hard to put together the pieces for a recession. I think you can probably get, you know, under 1% U.S. growth, and that maybe feels like a recession, and that is really the tipping point, right? Because you have real estate. I believe I've been wrong about real estate. I thought it was going to pick up last year, but rates got up. You know, what a 30-year fix got up to 4.5%, and then the market just wilted. But now it's way back lower. American housing is still relatively cheap if you look at it from a European perspective, even a Canadian perspective. Maybe not, you know, on the West Coast where you are, but
yeah, nothing's cheap here.
But in a lot of places, it really is, and I think that can go and help the consumer, and rates lower, like you say. So that it's hard. But if you were to make the U.S. dollar so much stronger, I think corporate profitability becomes a problem, because I think 40% S&P 500 profits are generated outside the United States. So if you take away that, you start to run into a lot of problems. And, you know, there's pressure to cut costs and whatnot there. And then again, that mentality comes around, and plus investment just isn't happening. And isn't, you know, you might have consumer buying, but if you don't have businesses investing, that's half the story right there. And if you look, you know, I ask people this question: what's Walmart investing in right now?
Basically, they're investing in expanding. They're going to have healthcare services. the consumer and their online business.
And they're online. Well, that's what the answer is. Yeah, well, they're investing in their website. So,
Okay.
if you had in Walmart investing in expansion, you're buying steel, you're building stores, you're hiring, I don't know, 100, 200, 300 people a store. Now, if you're investing in your website, how many people are you really hiring? 500? How many people does it take to rebuild a website? I don't know. Maybe it's 1,000, but it's, in all companies, we're investing in technology right now. And the companies that aren't investing in are scared of it. And they're not investing in anything. And I think we've hit this kind of tipping point in technology where companies are either the disruptor or terrified of being disrupted. And it's left like this old-fashioned investment in plants, machinery, buildings, sideline for now. Everyone.
Okay. All right, shifting gears to metals. Okay, they've been stars. But one of the features over the last couple of weeks, Adam, has been how the gold-silver ratio has come back in from well over 90 to trading in the low 80s. Do you think this is the beginning of that gold-silver ratio where you could have sold your one gold coin and bought 90 silver pieces?
I think we talked about this last time. I'm not the guy who likes to overcomplicate it. I think anyone.
But that's right. I remember now.
has said, listen, I've overcomplicated so many trades, and so has everyone else who's been out there.
Oh, I did that today too.
Ruined a good idea, a good simple idea by overcomplicating it. If you want to buy crypto, buy Bitcoin. If you want to buy metals, buy gold. Look at this chart. I mean, that's it. It's a genuine breakout in the best way. Yeah, maybe back to 1,400, probably at worst. Save some powder if you have to, but I just think that's going to new highs over time. I mean, these have been the best 3 months you're probably going to see for a while, but it's monetary. We're in an easing cycle globally. We're at zeroed out on rates. 17 trillion in negative yielding debt, if not more. The gold is unbelievable trade, and silver too. But I don't see a need to get onto that, and I don't really have any kind of edge on that.
Is there anything that could change the interest rate picture, or is it in cement forever?
With Trump, you can't rule out a resolution on the trade war, right?
Would that change the negative yields situation in Europe?
I think there has been a paradigm shift in consumers, central bankers, and the whole world realizing we're not getting back to the old inflation paradigm where we're getting 3, 4, 5% inflation. And central bankers have realized they've been wrong so many times that now they're going to stay low until inflation comes, right? Before it was, okay, we have to get ahead of inflation. It's coming. We promise it's coming. Okay, we were wrong last time. We're going to be right this time. Well, now they're saying, you know what? We're just going to keep them low until inflation comes. And that, I think the bond market has moved a lot on that. And it really changes the mathematics of a lot of investments. And so I don't see how it can change unless you really got some wage growth. And I just, it's not coming.
Is that the only thing wage growth is the only thing?
Yeah, it is not entirely out of the question. I mean, there's definitely some pressure on the lower end.
Because I don't know, it's like one of these asset classes where everyone's right. Because last year, all the money that moved out of equities moved into bonds and bond related, and they're buying junk like it's AAA. And it just seems like the whole world is right about being long bonds. And you know what? Not just treasuries, anything that has BOND at the end of it.
Yeah, especially looking
Isn't it crowded? I mean, it's crowded, but continues to be right.
It's truly the greatest bubble of our time. I mean, if you look at 30 years, buying bonds 30 years ago was insanely, it's better than stocks. And it just, you get to zero and you think, well, this has got to be it. And now you just go below zero. And it's madness. And I don't know if we're at the point where it's pure exuberance, but we've got to be close. And
I'm just trying to think of what pin could possibly pop the bubble, and I come up with, the trade war continues to escalate, And China wouldn't have to do a lot. I mean, the world's already accepted they're not buying treasuries, but the world has not. It has not been made known that they might sell treasuries, and they wouldn't have to sell a lot to create a bit of a panic, don't you think?
I mean, if you're trying to push up yields, I struggle to believe so, because you just have money coming in from Europe that it would sell boons that buy treasuries, and that's the reason I feel like the dollar, it's really can, the dollar's been a bull market as well for I don't know how many years now, good 5 years anyway, and a bull market probably doesn't end with a whimper. It ends with exuberance again, and I don't feel like we're there at all with the dollar. And that's the way I see it going until you see yields negative. Maybe that's the end of the bond market when
you mean here in the U.S.
When the 10-year T note gets below zero. That is maybe the blow up. But what do you do when you can't buy bonds anymore? If you get blown out of bond, you buy maybe gold. You can't go into stocks if bonds are blowing up. So I don't know. I don't understand.
Okay. It's to me. I think these are the lowest rates in 300-400 years, right? Or at least to the Civil War. Any view on the yen that has broken down a lot of its correlations? I mean, it would trade with gold, it would trade with yields, and with what yields have done, it seems like we should be not just having taken out the flash crash low, but trading well beneath it with what's happening in treasuries. Any view on yen here?
And I feel the same way about the Swiss franc, and even more so. These, we have this risk trade going, and they could easily roll over. And I talk about the yuan and the Chinese getting beaten up, and I think the yen, if you were to add 5% to the yen, you start to run into trouble. You get above or below 100. You start to run into some trouble with exporters in Japan. And that could, you look at this setup right here. It's just trying to make this bottom here at 105. And if that goes, you're probably down through 100. You start to get some hand wringing in Japan.
92.
Yeah. Oh, yeah.
A lot of the, bond bulls have been talking 92 yen for a while.
And I'm shocked. I'm in the same camp as you, surprised. And even more so with the Swiss franc. I guess it's that intervention premium. But I think the stakes are kind of raised now. If Japan starts intervening, the Swiss start intervening, and that it's a green light for America to get involved. I don't think you can stop U.S. dollar strength. And one of the seasonal trends that tied that back is dollar Swiss. It is a very strong month for dollar Swiss. Second strongest month on the calendar for dollar Swiss. Seasonal.
Interesting.
It's the same trade. It really is
right
again. But I'm interested to see through September 12th in the ECB how the S&B reacts, because if you look at the initial 120 euro Swissy peg and then the break, it was always around an ECB event that pushed them over the end.
And then I think you mentioned that September can be a negative month for indexes, stock indexes. Does it look like it could make one more charge, or we're finally going to have a failing rally here?
I think it's a range trade. I don't have that up as well. I mean, I could probably pull it up here pretty quick with a snapshot, but I think so. Yeah, I don't want to. And, it comes back to a little bit of fundamentals. All right, what's the Fed going to do? Well, I don't think they're going to be as dovish as the market would like. And then, what happens in the trade war? What happens with the ECB may not be as dovish as well. And that probably is that tips it over the edge, or a little bit of yuan weakness as well, maybe some euro weakness, any one of those things. And I guess that's part of what the bond market is saying. It's kind of surround trends.
There's S&Ps in the box.
And that's it. I think,
So if we take out the upside of the box, it would measure to new highs, 3,100 or so, wouldn't it?
It could. And that, that's the old pain trade, right?
Right.
Stocks peaked in October 2007, last time around, well after, housing started to roll over. And the bond market inverted, the yield curve inverted. So why can't it do that again and flush everyone out one more time? I'm
clear
bearish,
out the bears. Yeah.
but sure, that's the trade as far as I'm concerned. Is to go with whatever this goes for now, but it is seasonally. It's some of the weakness has not been around the last few years, so I caution a little bit about September weakness. But
well, another great run through the board, Adam. I think we've covered almost every asset class: currencies, energy, metals, stock indexes. Anything else that you might want to add that I didn't ask you about?
I just think we're trying to struggle with this yield curve picture, and
okay,
I think what it says is it's very fragile right now. Fragility. You can't measure fragility in markets, and one thing really has to go wrong, and that's going to tip over the apple cart. I think that's what the market's saying right now. Whether it's the trade war, whether it's the dollar strengthening a lot, whether it's something completely out of the blue, that we're in this situation right now where the global economy cannot take another blow.
shock.
A shock, yeah.
Okay.
And a shock is a strong word, but even a mild shock, I think, at this point is where we're at. So when that happens, and maybe the trade is to wait for it to happen, and then just pile into gold, to short stocks, to short oil, probably even sooner than that.
Well, I think that one of the best places, besides, of course, ForexAnalytix, to be prepared for potential shocks is Forex Live, Adam. And what a great job you and your team do there. Why don't you show the people your website and what you have to offer? And I really appreciate you coming in, buddy. Like I said, I know anytime that we're having a conversation, I could ask anything, and I learn from you every time we talk.
Thanks, buddy. Well, likewise. Yes, this is our site. We cover things in real time. You can see it updating just as we spoke there. Mike Pence is in Ireland at the moment, so we cover news in real time with a bit of commentary along with it. We try to be very quick. It was a free site. I'm not selling anything. We cover 24 hours a day and just try to be a kind of commentators on the market as it rolls. And, we had a record month in August. We just had 10,000 subscribers on YouTube.
Wow.
It's the market's interesting right now, and fundamentals certainly matter. So we're there and hanging in there. We didn't even talk about Brexit today. That could be a shock that tips in.
Yes. Gosh, I forgot that.
But, everybody's heard enough about Brexit. And today, I think 2 p.m. Eastern is around when we're expecting a vote. This is the video that I mentioned. You could probably find it on YouTube like that. You search Ducker and Forex Live. Showed you how to use a squawk.
Do you guys do a similar thing, like interview other traders outside of Forex Live?
Yeah, we try to find the time. We're 4 guys covering 24 hours, and we have all these ideas that we've had for years and years, and it ends up just being something comes up. So we try to stick to what we do best, and we hope to expand and grow and do that. But we don't. So
look at that handsome Canadian. All right. Well, you know what, Adam, again, thank you, my trading warrior brother. I hope that you and everyone your work touches during this fall trading season clean up and win the Super Bowl in January. Okay. All right. So thanks again, buddy.
All right. Thanks a lot for having me.
Really appreciate your input and your seasonal work. You're one of the best, bro.
Oh, yeah, thanks so much. Always a pleasure to be on. Take care.
Okay. All right, everyone, that's Adam Button. You can find him at Forex Live, at FX_Button, and that's a wrap. We'll see everyone return around Wednesday because today's Tuesday. And remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios. Thank you, Adam.